Hey guys, Justin Brock here with the Insurance Gurus podcast. Today we have Jared Strock, which sounds like Brock.
It does.
With an S.
We can start a podcast.
Strock and Brock.
Strock and Brock.
He's over from CSG Consulting, right, Jared?
Yep. And we actually just rebranded to Telos Actuarial.
Telos
yeah.
Actuarial. Well, we're premiering it here.
That's right.
Telos Actuarial. Here we go. And so we're back.
It's funny because I asked you the other day if you had ever heard of them, right? I was like, there's a new actuarial.
Look at that. It's
not a new one at all, right? Just a rebrand.
Yeah.
Yeah.
Good.
So got my buddy Steven Martinez here is our guru in the office, our technological guru, chief technology officer. And so it'd be a good fit. We really wanted to have Jared on here because they have a unique perspective in our industry. And I think we could learn about Telos Actuarial, as well as learn more about some of the data that's out there and what it says from the mind of someone that's probably way smarter than I am. So
I don't know about that.
Well, Jared, thank you so much for being here, man. How have you been?
Been good. Yeah. Thanks for having me. You're a little crazy to invite an actuary on a podcast. You know, we don't know what you can get.
We want all the perspectives. We're trying to get, quality information out, and the actuarial firms and groups are behind a lot of the data that leads to product design and rollout, and how much investment goes into the market and all kinds of different stuff. So
that is becoming very popular. It's very powerful, and I don't think a lot of people understand the power, but they're starting to understand the power. The more and more that people start getting the technology, and the more well acquainted they become with it, I think they're starting to understand the power of data. And I think you guys have been understanding that for a long time, and there's no other place that gathers the data better than CSG and you guys.
Yeah. Well, hey, so tell us about Telos. Why the rebrand? I mean, I have an idea, but tell us about the rebrand. Tell us about what it is that you guys do day to day, and what the goals there are.
Yeah. So our main thing is we help. So you think about the Medicare kind of market in general, just the demographic. Obviously, it's a growing market. And so there's, distributors like you, there's insurance companies, insurance carriers, TPAs, everybody wants products to sell to that market. Oftentimes, carriers maybe don't have the resources or kind of the expertise in the particular Medicare market. And so that's where we come in. We come and help companies develop new products for the Medicare market. We figure out how much to charge, so we price those products and then get them approved in all the state insurance departments. And then we can kind of manage the ongoing actuarial compliance needs for that insurance carrier. So we kind of just, there's all these different pieces: distribution, insurance carrier, TPA, reinsurer. We kind of are right in the middle of all that, helping put all the pieces together so that products can get out to the market, and then they can be sold by the insurance carrier. So that's kind of our main bread and butter. In addition to that, I kind of also have a little bit of a niche helping call centers and distributors understand their persistency, retention, and the lifetime value of their customer. So that's another area that we kind of focus on. So that's what we do. I think you asked about the rebrand. So Telos Actuarial, CSG, previously CSG Consulting, and CSG Consulting was previously part of CSG Actuarial. And so, I was an employee of CSG Actuarial for a long time, and everybody in the market knows CSG Actuarial for the quoting and enrollment tool. We also had, always had a consulting side of the business as well. And so when CSG Actuarial sold the software tools and all that to Integrity, at the same time, me and two other actuaries purchased the consulting arm of CSG from CSG Actuarial. So then we were, two independent, distinct companies. And so for us, it made sense at some point to rebrand to something different, just, to make it clear that, we're separate and different, independent from CSG actuarial, part of Integrity now. So we thought it made sense to provide some clarity.
You guys do
Absolutely.
some book valuations and stuff like that as well too, because you had done a book valuation for us a few years ago when we were doing some different estate planning. And so that's something that, a lot of people, when they're going to buy a book or they're going to try to price themselves as a book or a business, could go to you guys to get, good, estimates on actual value. And I'm sure that would help them go to market too. If they're going to market themselves to multiple people, like actually having somebody who's combed through the data and put it into a report the way you did for us.
Yeah, exactly. Yeah, it's like you've got, all those future commissions that distributors have is really an asset that's worth, it's valuable, obviously.
Yeah.
So we can help figure out the value of that.
Perfect. Yeah, you did a great job for us too. Comb through all kinds of stuff that I don't want to do. The devil's in the details, and the details can be the devil themselves. So, yeah, well, that's awesome. I mean, when you start working with groups, like you said, you kind of have a side project on helping call centers and agencies understand their numbers and all that. The primary target market or the primary people you're working with are carriers, though, a lot of times, right? Because you're doing the product rollout. Looking at that. Seems to be no shortage of Medicare supplement carriers that want to come to market right now. And it's been that way for a few years. Does that factor in, like when you're looking at, the numbers, I'm assuming like the competition level and like perceived potential market share, is like the market's growing, but there's also a growing number of companies trying to compete for it. And is that a big factor in going to market and figuring out where to go to market?
Yeah, I mean, it is definitely a factor. One thing about just kind of Medicare supplement in general is, when you think about the fact that companies have to take rate increases, over a number of years, part of the rate increase, what ends up happening with a block of business is, when a company takes a rate increase, the people from that block who tend to leave the block and move to a different block are the healthy people who can pass underwriting elsewhere, right? And so what that does over time to a block of business is it ends up requiring, the company to take a little bit more of a rate increase the next year just because they lost some healthy people. And so as that happens over a number of years, that block of business is no longer competitive in the market. And so, over time, kind of new sales start to wane on a block. And so just due to that reality, there's kind of always a need for new products in the market. Just because, that's just kind of somewhat of the nature of the market. It's not necessarily good or bad. It's just the nature of it, how it works today. As a block's been out there longer, it's less competitive. And so there's a need for products that are kind of freshly priced and new to the market. But yeah, there is more competition in the market today than there was 10 years ago for sure.
Yeah. Is it ever, I mean, you guys are the numbers guys on this, but so if you know that the increase is going to have a certain percentage of your healthy business shed, have there already been math estimates on the idea that the increase, even though they're going to lose a certain percentage of business, still nets them a higher margin versus not increasing and being able to continue to pile on healthy people and maintain keeping your healthy people on the book longer? Like you see what I'm saying? Like it's like this struggle between we have to increase to profitability versus if we just stayed stagnant and didn't do what the rest of the market does, are we able to keep those people on the book longer and actually be more profitable by maintaining your healthy people and keeping a low enough rate where maybe I can continue to pile on some more healthy people over time? I mean, I guess they've all decided that increasing the rates is more profitable still.
Well, yeah. So the reality is every year, kind of the cost for paying the benefits, goes up just due to medical inflation. Mm-hmm. And so there is that component that's always there. And so a company, even if they decided if they priced a product where where there were lower rate increases, as an example, they kind of baked that in. There still would be increases just due to the medical inflation that's out there.
Gotcha. Yeah.
So that's the other component of rate increases. It's not necessarily to like increase their profitability. It's part of it's just keeping up with medical inflation every year. So I mean, new products that come out today are priced higher than new products that came out 10 years ago, just due to that fact as well. But then there's that added component of, as a block gets older, it becomes less competitive. So yeah, that's kind of how it is today, for sure.
Yeah. And yeah, so when people would because we don't see them going up all that much. Like you'll see new blocks come out at a higher rate, but then there'll be these random outliers that'll come in with, still really low rates. And of course, then you have the temperature where people will say, oh, well, if they're coming in that low, they're just going to increase fast down the road, which doesn't always hold as true as they say it does. Like it just really depends on the carrier, and I guess their appetite for eating a little bit of a loss for a few years to maintain that position in the market. Like you've seen some carriers like Pekin would be an example, and they'll maybe not, in certain areas, not take a substantial increase so that they can keep that thing and that plan in the market longer, grabbing new business. Eventually they probably would have to, but it just seems like the behavior is different. I guess a lot of it depends on their appetite for how long they're willing to lose money on a block. It also seems to me that if it's a 6-year commission cycle, if somebody's willing to lose money for 6 years, not worry about the increases to keep up with the cost of medical inflation, that if they can keep that whole block on there to the fall off of the commission, that they can use the commission deficit as their profitability down. I don't know. Those are just things that go through my mind of like how long is a company willing to lose money? And I know some of them are willing to lose it for a while because they tell us their point of profitability is 4 years into a policy or more with most of them. So
yeah, the nature of a Medicare supplement product is that a carrier, because of the commissions, because of cost of, whatever marketing, getting a policy implemented into their system, that they aren't. It starts negative, turns positive in the future, and that's how Medicare supplement products basically are. That's how they're priced. Whereas you think about a life insurance product, as an example, where all of the claims are out in the tail, when they're paying death benefits. Also, in the future, there's really high claims. So on a life insurance product, there's more money made up front. Medicare supplement, it's basically the opposite. There's less money made up front for the carrier. There's more out in the tail.
I feel, with life, basically year 2, they're probably making a lot of money in year 2, whereas MedSup's got to stay on the books for a while, increase a little bit, and recoup some of their money. So when you go as an actuarial firm, obviously Medicare is a big thing. You brought up life. Do you guys focus on anything besides Medicare and like final expense market, or is that kind of the bread and butter right now, or do you go into other markets too?
Yeah, our focus right now really is the 65 plus market. And so, you think about, and really, we don't price any Medicare Advantage. It's a whole different world. So everything we focus on is more of the supplemental type products. So Medicare supplement would be our main thing. And that's the main thing that carriers are interested in developing new products for. But I'd say more and more, you think about the same agents that sell Medicare supplement also could sell a senior dental type product, senior hospital indemnity type product. There's a bunch of other ancillary products that more and more carriers are kind of seeing the need for. And even as you think about, hey, I got a customer that bought a Medicare supplement. How can I increase the lifetime value? One way is selling a dental or a PDP or a critical illness type product. And so those are other products that we also develop for carriers. Dental, dental's, I'd say the most popular one right now that we've seen. Carriers that maybe in the last 5 years rolled out a MedSup product. Dental is a popular one for them to look at, and they're the products that they're developing are somewhat focused on the senior market. So they're trying to kind of design them to fit that situation. I think senior HIP's another one that's interesting, where, if you really think about it, so, Medicare Advantage is popular right now, right? And people tend to compare Medicare Advantage to Medicare Supplement, which is, not really the right comparison, because Medicare Advantage takes the place of original Medicare,
Right.
both of which have gaps. Medicare Supplement fills in those gaps for original Medicare. There's senior hospital indemnity products out there that have been built basically to fill the gaps of Medicare Advantage. And so that's another one that I think is interesting, that, there's I think a potential huge market for that. If kind of distribution and the consumers, saw it as a need. It's definitely a product that exists and has, we actually look at that slice of the market, the senior HIP market, and it grows every single year. But the potential market's huge, and it's not anywhere near that potential market. So all those other kind of senior focused products is what we focus on.
Yeah, and that HIP market's going to just continue to grow. As the Medicare Advantage market continues to grow, we're already seeing it, boom. And so it's one that we aim to attach to every Medicare Advantage, that we're selling, and we're trying to get all agents on board with that, because, like you said, it is kind of the perfect complement to the Medicare Advantage option. So I think, like I said, that'll just continue to increase and increase.
Yeah.
I have heard that, like, there's probably some segment of the Medicare Advantage market that, they just really like the zero premium. And so trying to add on, a premium product might be hard, but there's probably some segment of that Med Advantage market that, isn't, they'd be fine paying some sort of premium for a product. So I think you're right.
Yeah, and there was actually a I think it came from CSG Actuary. There's this report that came out that I didn't prepare this, so
You're gonna butcher it, right?
I'm gonna butcher it, but there was something about for the first time, kind of in our history, the Medicare supplement market. I can't remember if it was didn't grow 1 year. I think they were crunching the numbers like from last year, and it just came out maybe a couple months ago. And it was like the first year that Medicare supplement market didn't grow at the same rate. And so anyway, when we're talking about, like, over time, like, I think we're still a long way away from, like, Medicare supplement not being a thing. There's a lot of people that are like, Medicare supplement going away because MA is growing so fast, but MA is growing fast from my perception because they had geographical and expansion, and a lot of it was also in the Medicaid market. And a lot of the people that are getting the Advantage plans that weren't before, they weren't Med Sup clients anyway. They just had Medicare only or Medicare and Medicaid.
Right.
And so that's where a tremendous amount of that growth is coming from, which is great, because those are people we couldn't sell anything before anyway. But it is possible to think over, in the future, the Medicare Advantage market does start to chisel away at the Medicare supplement block as well. Probably not. And this is my perception. I'm kind of going to get your insight on it. My perception is, because the market's growing, it's not like the volume of people on a Medicare supplement will go down very fast, but it'll start to split, like the new business. Some of the ones that would have been more in the Medicare supplement world, maybe on the fence and lean Medicare Advantage sometimes, especially because of the way it's being sold to them. But they're also used to it because of ACA and group plans are very similar to Medicare Advantage. So anyway, do you see what do you think the horizon on that is, like, for viability of the Medicare supplement market long term versus the Medicare Advantage market, or do you think it's never going to change?
I think when we put out a white paper every year called Future of Medicare Supplement, and we're actually just working on that as we speak. I think our perspective is both of those markets are needed and valued in the Medicare market. And to your point, the Medicare market in general is going to continue to grow, right now. And so, that overall market's growing. Medicare Advantage currently is growing faster than, people going into original Medicare. And so just due to that, there are some, I guess, maybe headwinds, if you will, in the Medicare supplement market a little bit. Like we've seen, to your point, this last year was the first year that the MedSup market, if you look at in-force counts overall, just very slightly shrunk. Last year, it was basically flat. The year before that, it was, I can't remember the exact amount, but we'll say 3% growth or something like that. And so after growing for a number of years, it has flattened out a little bit. And some of that, I think, is just, Med Advantage is growing faster. But the area, so, overall Medicare market's growing. The piece that's actually shrinking is that there's a group of people who, today, let's say they're Medicare eligible, but they still get their benefits from their employer group. That kind of piece of the pie keeps shrinking. And so, as employers, a lot of what's happening is employers are kind of moving their 65 plus folks off of their employer group plan and sending them out into the Medicare market. And so that piece of the pie keeps getting smaller and smaller. And that's where Med Advantage and MedSup are taking down those people.
Yeah.
So we think both markets.
There's a geographical correlation too. Like MA has been expanding heavily into rural markets, but also like it's got to be like your Florida is just getting less and less MedSup, and your Missouri is getting less and less MedSup than it used to be. But speaking of MedSup, we do have a word from our sponsor, Pekin. So just a second, Jared, while we hear from Pekin. We've been doing business with Pekin Insurance for several years. Not Peking, not Pekin, as some of our customers often mispronounce it. Pekin Insurance has a great portfolio of products. They've been very competitive in the Medicare supplement world for us. They also have Silver and Fit and some other additional added benefits their Medicare supplement client holders or policyholder get to benefit from. But lately, they have really transformed their product offering in the life space to include a very competitive by commission and premium final expense product. And they still have a lot of other life products that make them a go-to carrier for someone who's in many states. So if you are interested in checking out Pekin, you'll be able to click the link here, or if you can't see a link, or if you see it, just write it down, go over there. You definitely want to add Pekin to the portfolio, or you can email us for information at contracting@BobbyBrockInsurance.com. That's contracting@BobbyBrockInsurance.com. We want to get you set up with Pekin so you can start helping your customers with their awesome product and portfolio line today. All right, Jared, you heard it here first. Pekin Insurance. Been kicking ass for a while with them. So anyway, getting back to what we're talking about, that a geographical expansion, is that a big factor in, where the numbers are? Just like when you look at like the electoral college map, like obviously we have some areas that when you look at the total lives covered, they're going to be super heavy, like, LA, New York City, Miami-Dade, like that kind of stuff. Are those large hub areas influencing the total number scope very heavily, or is it even kill across the board changing at the same time? Can you tell that?
Yeah, so we in our white paper, we actually have these two graphs or two maps. One shows, what parts of the country does Medicare Advantage have the most penetration into the Medicare market, and it's just what you said. It's all of the urban areas, or very high MA penetration. So you can see that on the map. And then you switch it to MedSup. What counties have the highest MedSup, have a higher MedSup penetration? And it's all the rural areas. Mm-hmm. And I think, last year, if you count all of the counties in the country, what percentage of those counties have a higher MedSup penetration versus MA? And, versus what count of counties have a higher MA penetration? And it's around 50, it was around 50-50. So if you just count up the counties, but it really is like, the counties where there's more MedSup penetration have a lot fewer people. And so, our kind of viewpoint from that is like both products are very important to the Medicare market. and both are needed and both are valued. They're just done in a little different way. You know, Med Advantage needs, for it to really work well, it needs strong networks. And so where can you have strong networks? It's in the cities where there's a lot of people, a lot of different, providers of medical, benefits. So that's still a reality. Now, to your point, I do think, Med Advantage is probably making a little bit of headway in some of the rural areas, more so than they have in the past. But that's still, I think, the reality is, like, heavily populated areas have high MA penetration, more rural areas have higher Med Sup penetration in general still.
Yeah. Yep. We still see that. I mean, the MA penetration, we're in Mississippi, right? That's where we started. That's where we now have, agents writing all over the country. But Mississippi is the market that we understand probably more than any. And, when I started writing, the MA penetration was like sub 10% here in the corner that we really focused on. It is one of the more rural parts of Mississippi too. And Med Sups were extremely well perceived. Medicare Advantage was the devil to everyone. And it's slowly changing, where we still have to be careful the way like when we go and do educational seminars, we lean our presentation towards general information, but we do talk. We try to not talk negatively about Medicare Advantage. We try to speak in a way, though, because the advertisements are so positive for Medicare Advantage and so biased in the way that they present it on TV that we're having to combat that by saying, kind of making fun of like how silly it is that, they put it out there like, that Joe Namath has that plan. Like I'm sure covered by the NFL union or something for free and and he's got enough money where, healthcare costs are probably not a huge concern of his. But, we say things like that to combat it because we have to, and it resonates really well with a big portion of the population here. And some of those people still end up getting Medicare Advantage plans now, though, because it's changing. And so that's why we don't want to speak Medicare Advantage as bad, because it's not. It has its place. But it is sold in a way that seems to like try to push it on everyone. And I think a lot of that's because of the massive amount of the marketing dollars that they'll give to distributions and expect applications for. And so they have to deliver. So that is a huge pain point. I don't know if you guys get into compliance at all and looking at it, but recently the CMS compliance that came out kind of as a knee jerk to increased complaints related to Medicare Advantage marketing seem to be super focused on doing things that make it difficult for the brokerage community while not doing anything to the call centers that probably caused the issue.
Really? Oh, man.
Yeah, so that's been a huge talking point in the community right now, where they're requiring like recorded calls for all people, even brokerage, like field agents, right? Who are maybe doing 100 apps a year, and they're all doing it like Johnny from 3 miles down the road gave me a call and I enrolled him over the phone. They're wanting that recorded, which creates a tech burden for a guy that maybe wasn't as savvy. He's not in a call center. And by doing that, it didn't really do anything to the call centers. But they did say last year, I think it was 2020, they had 13,000 filed, 13 or 14,000 filed CMS complaints. And in 2021, it went up to like almost 35,000. So it was a huge, influx of additional and I think they count that as like founded complaints. It wasn't like just over like complaints period.
Ones that were
like
actually
ones that had some merit to them. So their knee jerk reaction is difficult, or is to do something that probably didn't help with the overall complaints. It was attacking the people that probably weren't responsible for them. But anyway, we see that being a huge talking point for us. So when we're looking at it, and I just didn't know if actuarial groups look at the way we're having to market changing as being as an impact on the overall landscape of what's possible in getting policies on the books for the carriers.
Yeah, I mean, and we do have a compliance team specific to the MedSup market, but we don't really get into the Med Advantage compliance too much. But I was aware that there were changes.
Yeah. Actually, that compliance change might help the MedSup market.
Yeah,
because it's because there are probably some field brokers that are just like, screw this, I'll just focus on MedSup and I don't have to worry about it. So
I mean, the other thing that we've seen, in kind of looking at helping distributors understand the retention and all that stuff is like, it makes sense logically, but Med Advantage has much higher lapse rates than MedSup.
Mm-hmm.
Part of it's just due to the annual open enrollment. Like, consumers can change every year without going through underwriting. So part of it's just that. But I mean, that's definitely kind of a interesting piece to look at too, is like from a distributor standpoint, it's a lot, maybe it's easier to sell them on the front end because it's zero premium.
Yeah.
But you have to, you kind of have to resell it every year, and you have to look at their benefits, make sure their product's not changing, make sure all of their doctors are still within network, all of that stuff that you guys deal with. But, it's like the Med Advantage lapse rates are a lot higher than the MedSup lapse rates. So
yeah, it's similar to ACA. And I was looking at our ACA book last night. I was looking at the volume of the people that it shows we have, and then trying to compare the per member per month fee to like what we're getting paid. And I was like, there's a huge disparity. So I start going back to old applications, and I'm like, wow, a lot of these have just fallen off. Like, not like they just did never talk to us again, and somebody re-enrolled them in a different plan, and all of a sudden we're not getting commission on them. But there's not with MedSup, coming into the market in MedSup, you just didn't deal with that because of the underwriting. Like, it was difficult for people to change anyway. So that's always been my favorite market is MedSup because of that. But the acquisition cost in MedSup is higher. So you're eating a lot more on the front end, especially in scaled. Like, we have a good acquisition cost for the branded market we're in. But when we try to go outside of that market, it's just expensive to find that prospect, because the Medicare supplement prospect is more expensive to market to, because they're typically slightly, I don't want to say this in a like negative way about a Medicare Advantage prospect, but the average Medicare supplement prospect just seems slightly more savvy and less susceptible to marketing practices than a Medicare Advantage prospect.
Yeah.
So yeah,
it's like all the big call centers basically only sell Med Advantage now. So
yeah, there's only like a handful, and the MedSup call centers that survived are heavy into SEO organic search because they're not marketing, they're being found, and they're a resource, and that's where lead flows come from. So it's completely different. But even like your biggest MedSup call centers have started hedging heavy into Medicare Advantage, other than probably like literally I can think of two solid MedSup call centers, and that's Jagger Esch's, Medicare FAQ, and Danielle Uncle Robert Spoomer Benefits. Other than those two, because Medicare Bob sold, and they AmeriLife turned his call center into a Medicare Advantage call center like overnight, it seemed like. So and then Dante Cantu, or Richard Cantu, when he sold Go Medigap, which is all Medigap, they've now turned that pretty much to a Medicare Advantage shop with eHealth. So that just seems to happen. When the biggest call centers get a hold of them, they just like, MedSup's high, let's go Medicare Advantage because the CPA is so low. But it doesn't seem like they're properly factoring in the lifetime value of the Medicare supplement client versus Medicare Advantage. I just think they're chasing that upfront marketing dollar from the Medicare Advantage carrier. Yeah. So I always wonder if
like I said, I think the projections are based on retaining that client for so long, and like you were just saying, they're giving that opportunity every year, so they're not staying on as long as the projections are. Yeah. So a lot of these big investment firms that are coming in and looking at, hey, these projections, I think the projections are off because people aren't staying on the books as long as you think they are.
Yeah. And then you look at a MedSup call center and they're staying on longer than their projections. Like, or that's what Jaggers, their MedSups, like the projections they use for estimates, their average MedSups actually stay on the books longer than that.
Yeah.
So
and then like you said, as plans continue to grow with benefits, it entices the consumer to look at other advantage plans, right? Like that may be the best plan for you right now, but as the markets continue to grow competitive, they throw more and more benefits. So again, they're having to look at that and consider other plans year after year.
Well, the Part B give back is such an odd thing too, because it changes every year with the Part B premium being higher. So if they just advertise 148, okay, and then the next year they're averaging 170.10 give back, they're going to call like, yeah, I'm only getting 148. Well, their plan was going to probably upgrade to that because it's probably a D-SNP anyway. But when they call, the call center doesn't care. They're just changing them to another plan. So that's that market is just, I mean, it's valuable, but it is a tumultuous, to deal with. Underwriting actually makes everything better for agents. So what's your on the MedSup horizon? Saying that it had this slight decrease in covered lives. So basically, it's saying that I guess slightly more people got off their MedSup plan or passed away than got on it. So people that may be the. Do you think that it's going to start to fall slowly over time, or it'll just kind of plateau and stay right along where it's at?
I mean, I think our kind of best guess right now is that it'll start growing again.
Okay.
So what we look at is the Medicare trustees puts out a projection where they say, over the next 20 years, here's how the Medicare market's going to grow. They also have a projection for Med Advantage. And so we use that projection, and that's kind of their best guess based on where things are at today and where they see things going. And then from there, it's like, okay, what's left over? And what's left over is, original Medicare, and then folks who are on like their employer group plans or whatever. And so when we project out and say, okay, those employer, that other bucket, we're going to project it to keep shrinking just like it's been over the last 20 years. What's left out is that MedSup grows. And so that's kind of how we, project it out. And when you do that, it shows kind of long-term that it'll keep growing. And so that's our best guess right now.
Yeah.
It'll
perfect. That's what I want to hear. That's what I want to hear. So you heard here first, man. We brought in an actuary, and he said MedSup's going to grow. So
continue to grow.
That's what we want. We want both of them growing is great. So, and that I think there's plenty of people coming into the market to make that happen. So, well, Jared, we really appreciate you coming on today, man. If people wanted to, utilize your services in the call center arena, in the agent, like coming in alongside trying to do some projections for agency, book valuations, that kind of stuff, how would they get in touch?
Yeah, so probably, I'm on LinkedIn, so you can go follow me there. And I try and put out a decent amount of content related to this kind of stuff. And then my email address is probably the other way, just jstrock@telosactuarial.com. So those would be the two best ways.
I've quoted some of the stuff you've put out there before and content we've put out. So I've quoted you a couple of times. So you're quotable. So yeah, if you're on LinkedIn, connect with Jared, because it's if nothing more than for the content that he'll put out there is there's some telling information in there. So, well, thank you again for being on here today. We really appreciate it, and we'll see you next time.
All right, thanks for having me. See ya.
All right, Jared. It's time to train like a guru. Go Guru University is an ever-expanding, cutting-edge, interactive training platform with live weekly coaching calls constructed to train agents efficiently and compliantly. Go Guru University offers a library of training modules explaining Medicare A to Z, face-to-face and telesales training, SEO and other marketing, and much more. Visit goguru.university to schedule your one-on-one demo today. It's time to grow your agency like a guru. Introducing Go Guru Pro. The Go High Level platform allows for minimizing software-based subscriptions and grants control over several facets of marketing and communication. Automate your workflow, communicate with your leads, book appointments in advance, and house all your clients in one secure location. Visit goguru.pro and schedule your one-on-one demo today.